Bank reconciliation. Now, I want you all to think of what is asset for the business. It's a debit balance. But what about liability for the business? It's a credit balance. These are the rules that you should know. Okay. Moving further, I want you all to think, what about the positive balance in the bank? What is it for the business? It is an asset, and that is why it's debit. But same positive balance for the bank is credit, because it is something that has to be returned to the business. Likewise, the negative balance for the business is credits, but for the bank, it's debits, because it is something that has to be received by the business. So depending upon the perspective, whether you're going from the business point of view or from the bank point of view, the rule of debit and credit will change. Think of it when the account of yours is increased by the money. Probably your parents are putting in pocket money in your bank account. What notification do you get? You get a notification saying that your account has been credited. When your account is increasing, why is the notification saying credits? While that money increasing is a debit for you, is an asset for you. So it should have been debited. The notification should have been asset as bank account is debited. That's because the notification that you get is from the bank point of view and not from the business point of view. So point of view is very important here. Now, let's get into the impacts for the cash book and the bank passbook. There are direct debits. Direct debits, like I said earlier, are timely payments on standing instructions, like your electricity being paid time to time or Netflix expenses being paid time to time. So bank passbook gets notified first, so that's why it gets updated first, whereas cash book could be updated at a later date when notified. So as such, cash book and bank passbook are not matching for time being. So to match it, less it from cash book. Direct credit. Just like direct debits, automatic payments could be received in your account. Bank is updated first. That's why passbook is also updated first. To bring the cash book on par with bank passbook, you need to add it. Then you have checks issued but not yet presented. You write check to your suppliers. They go and they present it to the bank. But in this case, they have not yet presented. So what has happened is, as a result, the moment you issue it, you less your cash book, but the bank passbook is not being decreased because the check has not either been presented or it's still taking time to process. As a result, less from your bank passbook. Outstanding deposits. You have received checks. The moment you receive check, you add to your cash book. But again, it's taking few days to process. As a result, add your bank passbook. You have checks dishonored. So there are customers who have given you checks, and as a result, you have added in your cash book. But later they got dishonored, so your cash book is still up. So decrease it. You have error committed by the bank. Now, depending on the error, what type of error it is, you will add or less it. Say, for example, your account has been wrongly credited, so less your account, less the bank passbook. If it has been wrongly debited, money wrongly removed, then you add back. Error in cash book. There could be any totaling errors. Again, depending on the error, you will add or less from the account. So these are the impacts for bank reconciliation.